Howdy everyone, welcome to the channel. Today we are taking a look at my dividends and capital gain distributions from the month of April. First, I'll be sharing my bond dividends. Not James Bond, silly. Bonds as in a fixed income instrument derived from debt issued by companies and various government entities to help them fund projects they need capital to complete. These can look like a small school district needing funds to renovate an old school, or a massive multinational corporation using the money to perform cutting-edge research and development. I started buying shares of the iShares Core US Aggregate Bond ETF last month. It's comprised of government and corporate investment grade bonds. AGG is similar to Vanguard's BND ETF. I received $13 for my April bond dividends from AGG, and this is a monthly dividend paying bond fund. Even though this holding is in a retirement account, I choose to use an ETF instead of an index fund so I can exit the position while the market is still open should crazy buying opportunities ever present themselves. For more diversification, I also had a small amount of money invested in BNDX, which is Vanguard's Total International Bond ETF. BNDX is similar to the iShares IAGG ETF, and as its full name suggests, it invests in international bonds. The dividend yield for this fund is a lot lower than the US bonds, since I don't need this bond income for survival right now compared to, say, someone who's already retired. Having an internationally diversified bond portfolio doesn't actually make sense for me. So I might just close the position altogether and put those funds back into FCROX. In any case, I received 89 cents from this fund in April. Next, we have SPHD. Unlike AGG and BNDX, SPHD isn't a bond fund, so please excuse us while we rebrand. Okay, thank you for your patience. Like I was saying, SPHD is a monthly paying dividend ETF. It's focused on maximizing income through dividends and minimizing losses by choosing stocks that are less volatile. In April, I received $2.02 for my dividends. Next, we have SPAX, which is the Fidelity Government Money Market Fund, and that's where your cash sits while it's waiting to be invested. Since it's a money market fund, it generates interest, and in the month of April, I received a whopping 1 cent. Before we dive into the next dividend category, I want to explain market capitalization, aka market cap. Let's be clear, when I say large cap, I'm not referencing the fact that Anthony Mackie will likely be the star of Captain America 4, because that would be #no cap, you get me. Instead, when I say market cap, I'm actually talking about a company's aggregate market value as a dollar amount. You can calculate the market cap of a company when you multiply the total number of outstanding shares by the current market price of a single share. Let's say Tesla has 959.85 million outstanding shares and a current share price of $694.40. That means that the company's market cap is greater than $665 billion. Is everyone still following? At the smallest end of the market cap continuum, we have microcap stocks. These would be companies that are publicly traded but have market caps between $50 million and $300 million. Microcap stocks are probably volatile, and they're not discussed as much as other companies, but I wanted to mention it anyway. Then we have small cap stocks. These need to have market caps between $300 million and $2 billion. Companies like Crocs and Planet Fitness are examples of small cap stocks. Mid-cap stocks range from $2 billion to $10 billion in market value. That includes companies like Twitter and Chipotle. This time last year, Tesla was actually a mid-cap stock before continuing its explosive growth and launching itself into the S&P 500. We've also got our large cap stocks, which have market values above $10 billion. A lot of these companies are going to be household names like Johnson & Johnson or Southwest Airlines. Finally, we have mega cap stocks, which are companies with valuations that exceed $200 billion. Generally, people just say large cap because there are only about 20 mega cap companies. I also wanted to mention capital gains. The term capital gain describes the profit earned on the sale of an asset which has increased in value over the holding period. In the United States, when you sell an investment within 12 months, a short-term capital gains tax applies. Your investment income derived from short-term capital gains is treated as your regular taxable income. So if you make $50,000 at your job and then you realize $10,000 of appreciation in your stock portfolio within 12 months of the initial stock purchase, your income for the year is considered $60,000 and is taxed at a corresponding rate. I also want to note, when I say realizing the gains, that means like selling the investments. So even if your portfolio were to gain $10,000 in a year, you would not be taxed on that until you actually sell the investments. Going back to the previous scenario, if you were to wait 12 months before realizing the $10,000 in gains, all of a sudden it would be taxed at the long-term capital gains rate, which for your $50,000 income would be 15% instead of your income tax bracket, which would be 22%. Also remember, I'm not like a CPA or any kind of tax or investment professional, so do consult with someone if you have questions about these. All right, let's get back to business. Within a mutual fund, capital gains work a little differently. I came across a Vanguard article that describes it nicely, so I'll just summarize it. In short, when you sell mutual fund shares at a profit, you'll owe taxes on the gain, just as you would if you'd sold the stock of an individual company. Additionally, however, the funds have to pass on any net gains they've realized at least once a year. This means that you may also owe taxes if the fund realizes a gain by selling a security for more than its original purchase price, even if you yourself haven't sold any shares. It's also worth noting that if a fund realizes a short-term gain on a security, you will receive the distribution and it'll trigger a short-term gains tax even if you've held the actual underlying shares for more than 12 months. After I learned this, I started investing in ETFs in my taxable brokerage accounts and focused on index funds in my tax-advantaged accounts. If you've been watching the news, you're likely aware of changes coming to Biden's tax plan. Hopefully, this explanation gives you some more context to understand how capital gains taxes currently work. Most people aren't impacted by the coming changes. However, if you have concerns, it's probably a good idea to speak with a CPA. Now that we have that out of the way, let's look at my next dividend category. My first dividend-paying equity fund in April 2021 was FSMAX, which is the Fidelity Extended Market Index Fund, Fidelity's FCIPX Zero Fund, Vanguard's VXF ETF, and their VEXAX Index Fund are all funds that are similar to FSMAX. More broadly, an extended market index fund, which can also be called a completion index fund, is designed to complement investments in an S&P 500 fund to give you exposure to the total U.S. stock market. The S&P 500 is comprised of large and mega-cap companies, whereas an extended market fund will mostly hold small and mid-cap stocks. This April, I received $3.09 in dividends from FSMAX. I also received $214.68 in long-term capital gains distributions. My next dividend-paying fund is FSCSX. Try saying that 5 times fast, am I right? It's a Fidelity mutual fund that's focused on investing in companies related to software or information-based services. Last month, I received $34.76 in short-term capital gains and an additional $44.03 via a long-term capital gains distribution from the fund. Unfortunately, the fund did not distribute a dividend, which I was very surprised by since there are several dividend-paying stocks in the fund, but I'm guessing that'll come in December. Together, my investments in FSMAX and FSCSX only yielded $3.09 in dividends, which is a bit disappointing. Though the capital gains distributions were nearly $300 across the two funds, my understanding is that that's more of an adjustment to my cost basis rather than actual passive income. In any case, apart from the Fidelity funds, I also received dividend payouts from some of the individual stocks I hold. The 5 different stocks gave me a total of $21.04. My next dividend category is real estate or REITs. I track my REIT dividends separately from my general stock. And my oldest REIT is Store Capital, which I started investing into in 2018. This April, I received a nice dividend of $38.16. My next REIT, which paid out in April, was Hannon Armstrong, ticker symbol HASI. The firm describes itself as the first U.S. public company solely dedicated to investments in climate solutions. It qualifies as a REIT because it often owns the land that it uses for projects. An example would be owning the fields developed for use by a wind farm. In any case, I received $2.18 in dividends last month. As expected, my April dividends are far lower than March's. I wasn't sure how April would compare to February, but I'm pleasantly surprised to see that it's more than double what I received in February. If you want to see which dividends I received in previous months or learn about my other passive income sources, check out my passive income playlist. You're still watching this point, so I imagine you really enjoyed this update. Since that's the case, give this video a big ol' thumbs up, subscribe to the channel, and hit the notification bell so you'll be alerted when new videos drop. Do you track your dividends? Let me know in the comments section. As always, thanks for tuning in.